Hey guys, what's going on? My name is hamishwhodder and it is that time of the month again where we go through my investment portfolio. This is for the month of October 2018 and we're going to go through all of the usual stuff that we go through in this series. We're going to start off with my portfolio composition. How much do I have in cash versus how much do I have in equities, and how has that changed since last month in September when I made this video. Then we're going to go into some recent trades. Have I been making any trades? And if not, what trades am I looking to make in the coming month, and what kind of price targets am I looking at for those stocks that I'm looking to invest in? And then of course, at last, we're going to go through my portfolio holdings. So what am I holding? How much am I holding of them? And what percentages do they make up in my portfolio? Now, I will preface this video by saying that not a whole lot has changed since last month. And remember, I am a long-term investor, so often there's going to be months where not a lot happens. Although in this video, I will talk about some of the news topics that have happened and things that have happened with the stocks that I'm holding. And we'll see how long this video goes for. It still might go for quite some time. We'll see. But let's just start off with my portfolio composition. So what kind of position do I have in cash and what kind of position do I have in equities? So as of last month, I had about 40% in cash and I had 60% in equities. And as I said, not a lot has happened this month, so it is very, very similar to how it was last month. Instead, this month I now have 42% in cash and I have 58% in equities, and nothing has really changed. There's no real reason this has happened. Basically, the equity position in my portfolio has shrunk a little bit because the stock market has been down in the past month, or it has been for me at least personally with the stocks that I hold in my portfolio. But at the same time, my cash position also went down a little bit because I actually booked an overseas trip in the last month, so that reduced my cash position a little bit. And as you can see, it hasn't really changed. It's gone from 40.60 to 42.58, so it's pretty much exactly the same as it was last month. So that brings us to talking about, have I made any recent trades? So let's sit down and look on my laptop and see what trades I've been making, if I've been making any in the past month. Alright, so in terms of trades, I actually didn't make a single trade this month. So pretty boring, I know, but I'm just going to talk about some of the things, some of the opportunities that I'm looking for still. Because of course, even though I'm not buying, I'm always watching, I'm always seeing what stock prices are doing and seeing if any opportunities sort of arise. And the first opportunity I'm looking at is for my VAS position. So my position in the Australian market, the index that tracks the Australian market, I'm always looking to increase this position, especially if it's falling. So if we see the markets, because usually if the US market falls, the Australian market falls. So if we see the US and Australian markets fall maybe 10 or 20%, then I will be looking to increase this position and sort of start to average down my price as we sort of lead into this new cycle and start to see a downturn, which is likely going to happen over the next couple years. I'll be looking to increase that position and keep it at about probably somewhere between 15 and 25% of my portfolio. In terms of my other stocks such as Facebook and YY and NAB, I'm not really looking to increase them at this point in time. YY and Facebook, I'm not interested in increasing them because they're speculative positions, so I want them to be small positions, and I just want to see what my small investment in those companies will do over the long term. I don't completely believe in those companies, so I'm not going to be increasing them to 10, 15 or 20% of my portfolio. But when it comes to Thor Industries, I am constantly looking to add more to that position because it is the company that I completely get behind, and I'm looking to keep it at around 20 to 25% of my portfolio. So if Thor Industries continues to fall, which it probably will, especially if we go into a recession, we will probably see Thor's earnings slow down dramatically, and then we'll see the stock price come down further. And if it does, that means that the position, my Thor position in my portfolio will shrink, and therefore I will be able to add some more and bring it back up to that 20 or 25% position. But essentially, I'm waiting now until it hits about $50 or $60 per share to make my next investment. And the reason I'm doing that is because when I make my next investment at that price, I'll be able to bring my average price paid for Thor Industries down to around $80 to $90, which is exactly where I want it when I max out that position. So ideally, in the next couple months, or whenever we have this recession and whenever Thor Industries continues to fall, if it hits $50 or $60, I will add some more to that position, and then I will have an average price that I'm very, very happy with. And if it continues to fall even further below that, I don't see how it could, because of their book value. I don't think I could see it falling much further than $40 or $35 per share. But even if it went that far down, I would even add some more, close out that position, finish it off, and then I would have an average price of somewhere between $70 and $90 per share, which I think is a very good average price to have before Thor Industries starts to turn around when we get into the next cycle, maybe in 5 years or so. But let's just now go through each of the holdings and see what percentage each one makes up in my portfolio. So to start off with, we've got the smallest position, which is NAB. So that's the National Australia Bank. And that is currently 4.9% of my portfolio. So NAB has continued to fall due to, well, there's a couple of reasons, but essentially because the US is raising rates, NAB has a lot of loans in US currency, and US currency is getting stronger, which means that the debts they owe on that are getting bigger. And there's just a number of factors that are against it. The Royal Commission continues to go on. There's a number of short-term negative effects that are impacting NAB, so that has continued to fall, not by a huge amount, but it has sort of continued to just trickle down. Although NAB is paying about an 8% dividend at the moment, and at the price that I bought it at, I think it was a 7% dividend or something like that. So it's still paying out quite a lot, and I'm getting those dividends reinvested to get more shares. So that is a good sign. The next smallest position we have is YY, which is now 5.8%. So just sitting around that 5-6% range. And YY has continued to be hurt, as many other Chinese stocks have been hurt. And again, I'm not watching too closely because it is a speculative position, but it has been falling, and it'll be interesting to see if those stocks will turn around anytime soon, or whether or not they'll continue to get beaten down as, say, the US goes into a recession and it just drags down the world economy or something like that. Next, we have Facebook stock, which is 8.2% of my portfolio. Again, Facebook has sort of trickled down a little bit, hasn't fallen too quickly, but it has been falling. And I think I'm now down double digits in that position as well. But that's just another one there. The next biggest position we have is the ASX 300, so my VAS, Vanguard Australian Shares Index, that tracks the Australian market. That is 14.7%. So I would happily have that index a little bit bigger. So like I said, if we see a 10 or 20% pullback and that position becomes 10 to 12% of my portfolio, I will happily bring that back up to 15% or even 20% maybe, if I feel like it. Then we have the biggest position that I have in the stock market currently, which is, of course, Thor Industries, and it is 24.4%. And Thor as well has continued to fall a little bit further. The last time I bought some Thor, it was at about 92, I believe, and now it's at 81. So it's continued to trickle down and continue to fall. And as I said earlier, I will be looking to invest some more if it can fall another 25% or so, and close out my position and finish my position off with an average price of around $80 to $90 per share. And then lastly, of course, we have that cash position, which is 42% of my portfolio. Still a very big chunk, but I think it's important to keep a large amount of money on the sideline, especially when we're getting towards the end of this cycle, so that if there is a significant pullback, 20, 30%, 40% pullback, that we have enough money to sink into some stocks, get great deals, and get really great returns on those businesses over the long term. So it's definitely very important to keep some cash on the sideline. I hope you guys enjoyed this video, and if you did, please leave a like and let me know your thoughts down in the comments section below. If you're new around here, make sure you hit subscribe so that you see all of my latest content. And I just wanted to make you aware of something if you didn't know already. Myself and Brandon from the Aussie Wealth Creation YouTube channel, we run a podcast every single Saturday where we talk about the latest news in the stock market from the previous week, as well as specific topics such as value investing or passive investing or analyzing individual stocks. So I suggest you go check that out if you want. It's on the Aussie Wealth Creation YouTube channel. But I hope you guys have a great day, and I'll see you in the next one.